In this video, we're going to discuss what investing is and how you're going to start investing your first $1,000. So let's get to it. So investing is basically generating income in order to get a positive return with the expectation of getting income, profit, or gains. One can invest directly or indirectly, such as investing in the stock market, real estate, or into a business. So investing is different from saving because there's speculation there. There's speculation that your investment could grow. It could also fail as well. The main reason for investing is because you want to outpace the rate of inflation. So inflation is the gradual rise in prices with the slow decline of your purchasing power over time. The goal is to make enough money off your assets so that you surpass the decline of the value of your money. So I'll give you an example of inflation. So we see a lot of that recently, especially. So let's say you go to the grocery store and you buy a loaf of bread. And this loaf of bread last month was $2.50. And let's say this month it's $3. So that's exactly what inflation is. What you want to do is you want to invest your money to at least keep up with inflation and hopefully beat it as well. So don't throw your money under the mattress. So now that we know the basics of investing, I want to go over 5 steps to start investing from $0. So step 1 is you want to make an appointment with your financial advisor. So you want to go to your bank and you want to ask them to open a savings account. So you want to open a savings account that has a low risk, low fees, because the goal right now is just to start saving your first $1,000. You're also going to want to ask them to put money in this savings account every month automatically for you. So you can choose the amount that will work with your budget. So step number 2 is after you have accumulated your first $1,000, and some of you may already be on this step, so you can skip step 1. Then you're going to ask yourself, what type of account do I want to start investing my money in? These accounts are going to fall under 2 main umbrellas. So the first umbrella is a registered account, or you could say a tax advantaged account. So this type of account is normally used for saving for retirement. And this account will give you the tax benefit of the money you invest in it, as well as the money you make in the account. And the second type of account is called a non-registered account or a taxable account. This account will not have any tax benefits, and it will also be more accessible to you if you want to withdraw money in the future without being taxed. So step 3 is once you've determined which umbrella you want to invest in, there's going to be 4 types of investments that fall under these 2 umbrellas. These 4 investments are stocks, bonds, mutual funds, and ETFs. Stocks means it's basically owning a fractional portion of a company. So you're basically owning a small piece of that company. So a bond is basically a loan from an investor to a borrower, like a company or a government, and they pay a fixed rate of return to the investor. So bonds are usually less risky because you're investing in large companies and governments. So they will be usually highly rated, and the only risk you're essentially taking is the interest rate risk. So there's no guarantee that you'll be paid that interest. Now, ETFs or exchange traded funds are similar to stocks because they are traded on the exchange just like stocks. They are designed to track the performance of a certain commodity, index, asset, or sector. And mutual funds is essentially a fund that pools money from multiple investors to purchase a portfolio of securities. These securities could be stocks, bonds, commodities, or even real estate. And since they are more actively managed, they're usually higher in fees. So step 4 is determining, do you want to invest your money on your own, or do you want a financial advisor to do that for you? Now, most investments like stocks, I would say those are more managed individually, because unless you have a large sum of money to invest, the financial advisors at the branch will normally not do that for you. So you'll have to do it on your own. So if you want to buy stocks, you'll want to most likely manage it yourself. ETFs, same thing. You'll want to manage that yourself. Now, bonds are more commonly purchased at the branch. They can also be bought online yourself, and mutual funds will be done through an advisor at the branch. Now, step number 5 is investing your money. Woohoo! So you have now saved enough money, you're going to be able to invest it. Now, make sure you continue investing regularly every month in order to grow your account as much as possible. So if you guys have found this information helpful, I would love for you guys to give me a thumbs up. I would also love to know what you guys have done. Have you guys decided to start investing your money? And if so, what type of account have you guys invested in? If you have any questions, please make sure to comment below, and I will see you guys next time.